Okay, we'll get started. Thanks for coming. Welcome, everybody. And this webinar is all about the new POTBOT template in EdgeRacer. This is something that I've been working on quite a lot over the last several weeks, and it is a little bit more extensive than the other templates that are based on scanning. So this one is all about probability of touching, and there's a probability of touching statistic which goes with options, and so I'll kind of explain a bit about that and then what this template shows. So first of all, there's a disclaimer, not recommending any stocks. Backtesting has limitations, and trading involves risk. Probability of touching itself, there's lots of information on the internet about that statistic. One of the best places to go, I think, is in Tasty Trade. They have, if you just go to Tasty Trade, there's, let's see if I can bring that up over here. You can enter into the search box the term probability of touching, and you'll find a whole bunch of videos that explain about that as it refers to options and options pricing. It's a very useful place to go. And when you look at an options chain in your whatever options program you have, most options programs will show a probability of touching. And so here I've got the column added into my, this was Think or Swim. And what you can see here is looking at Microsoft. And this was the 5/24/2016. So to give you a bit of context as to what was happening in Microsoft at that time. Okay, here's a chart. So 5/24 was actually the day before this break above the upper Bollinger Band. And I think in the email I sent out, the information I was given was actually for this bar and not this bar, so that was my error. But we're going to talk about this bar here, and this bar is the bar that Microsoft broke above the upper Bollinger Band. Most traders know what Bollinger Bands are, and most traders think that a move above or below can be significant. But the thing is, how do you know if that is a bullish idea, a bullish signal, let's say, or a bearish signal? So the probability of touching is one way that options traders or options pricing reflects what could possibly happen to a stock. So on the Thursday, or so the Wednesday, 5/24, that's the day before it broke above its upper Bollinger Band. You can pull up a chain here, and I'm looking at the June 16, 24 days to expiry, and Microsoft itself at the end of the day was the last trade was 51.59 on that day. And if you look down to the 54 strike and look in the calls column, these are out of the money right now, but the probability of touch column shows 32.51%. That means that the pricing in this option is such that people are expecting a Microsoft to touch the 54 level. There's a 32.51% chance of that happening based on this pricing. So that was the day before the break above the upper Bollinger Band, but the day after, or the day of, let's say, after the market, this is end of day, here's the pricing. Now, the 54 level, we've got a 42.06%. Microsoft's last trade was 52.12. So what this is saying is that traders forward-looking for the next 23 days, in this case, are looking at a probability that Microsoft will hit the 54 level, and not above, not sort of remain above. It's not probability of expiring, but probability that Microsoft will actually touch that level at some point during the next 23 days is 42%. So, that can be, that's a very interesting statistic because it really tells you a lot about what traders are thinking is going to happen. But if you are a technical analyst or you're into technicals, then certain patterns you might believe will change that statistic, and it may not be reflected in the statistic here, because generally, options traders are not looking at those any particular patterns. It's just an opinion of prices get bid up or down, increases the implied or reduces the implied volatility, which in turn has an effect on the formula for probability of touch. So that's what they're saying. So what I wanted to do was, because we have EdgeRater with all the historical data and have the ability to run lots of formulas very quickly and using the calculation engine, what I wanted to do was see if this is realistic based on historical patterns. And it just so happened that when I released the template, Microsoft crossed above the upper Bollinger Band, which led to a nice segue into introducing that particular test. So let's close this down now, the slide, and we'll go into the program. And if you've downloaded the latest templates, you should find that you've got 2016.5. And when you download that and you click on the New This Month category, you'll find that you have a template for May, or at least an update for May, and it should say that in the Pro Tools category there's now a new template, probability of touching based on technicals, which the acronym is nicely POTBOT. But if you search for POTBOT on the internet, you'll find things that are actually related to marijuana, so it's a slightly different thing. But yeah, this will be the EdgeRater POTBOT. So if you come down to Pro Tools category over here, you'll find that there is a POTBOT template, a new probability of touching based on technicals. So what this is trying to do is take a particular technical event or a condition. And in this case, we know that Microsoft crossed above the upper Bollinger Band, so the condition I'm looking for is the cross above the upper Bollinger Band, and I've chosen that in here. When you select the template, you get a bunch of choices for your test, essentially. So you can type a symbol. You can just click on the cell here and type in the symbol name. You can type a date range over which you want to run that test to find out historically over that period of time what happened after cross above the upper Bollinger Band. And then you can say how many days you want to look ahead after that particular event. And the defaults in here are from 2 days to over to 21 days and reporting every one day. Now to choose a script, there is a nice handy little button here. And if you click on that, you will find a list of all the scans and indicators that are in the system. Now that would include everything that is in there installed with the application, and also if you've programmed in any of your own scans, they will appear in this list as well under My Scripts. And you see I don't have any in here custom right now, but so I've got the My Scripts area, I've got system indicators. Indicators don't actually generally provide a condition. Indicators normally output things like analog values where you can plot moving averages and close price and things like that. And sometimes they output a 1 or a 0 depending on certain conditions, but often they are just for plotting indicators. But then in the system scans area, this is where you'll find the scripts that detect conditions and output 1 or 0 values depending on the presence of that condition. And if you just look down through the list, what you'll find is, as you come down through here, you'll find if the script has a description associated with it, it will appear up here. Parameters you can fill in here, and then scripts can have more than one output, and so it's possible to select the output from this area down here. Most of the scan scripts just have one output, which is called the event, and so that's the default thing that's selected. Now if we look at AUBB, which is where we were before, you can see that this is a script which generates an event whenever the close price is above the upper Bollinger Band. And the previous bar's close price was below the band, so it is detecting that cross. And 20 and 2 are the periods for Bollinger Bands, the default periods. You could change those if you want to try out different things, but I'm going to leave them set as default. And then the output line is just the event. So I'm clicking OK here. This is actually the way that it comes in the system. It's set up like this, so you don't have to make any changes to run this particular cross above upper Bollinger Band. This template is a little different to other templates in that it doesn't use a list of symbols. So you notice on the left here I've got my list of liquid options. It's 500 stocks in here, but this template is only going to run a test for Microsoft. It's not going to look at all of the other symbols that are in this list. And in fact, you don't even have to have Microsoft in the list on the left-hand side. What will happen is if Microsoft does exist in this list and it has enough data to satisfy your testing criteria, it will use the data from your symbol list, so it won't go and download any more data. But if there is enough data in that list, it will just use the data from the list. So that way, if you're running multiple tests, it's not going to go and download that data each time. It will just use the data that's already downloaded. Okay, so from here, I probably, for this particular list, I do not have enough data in here from Microsoft. So, because this is looking for a test from January the 1st, the year 2000 to 2016. So obviously I'd need 16 years worth of data here. And this particular list is only giving me 2 years worth of data. So I definitely don't have enough data in that list. But I don't have to worry, because as soon as I press run here, it will download data from wherever your default provider is. And I believe this default provider is set up for, I think this one is set for HGSI, but you could have it set to Yahoo, and that would have downloaded data from Yahoo for that run. And before I look at the results, let's just show what's happened in terms of symbol lists. Because there wasn't enough data, it downloaded data, it created a brand new symbol list called POTBOT symbol, and it put that symbol in there. So next time when I run this, I will, it won't have to download that data, it will just use the data from here. Hope that makes sense. Okay, and now we can take a look at the report. So the report that's produced from running this template. There could be a lot of data depending on how many days you wanted to test out. Remember the default I had set in there was 21, so I've only got 21 columns of actual report data here. But if you ran this over, say, 252 days, which is a trading year, this would just go on for 252. And one handy little feature with the reports is that you can zoom in and zoom out, but there isn't actually a button to do it. But if you have some way of scrolling either on your trackpad or on a mouse with a wheel, and you press the control key and you do that function to do the scrolling, you'll find a nice little zooming feature occurs here. And that's quite handy because you don't sometimes want to see the numbers that are associated with each of these cells, but just get an idea of the general pattern that occurs. But we're going to look at the numbers because I'm going to explain a bit about what they mean. So what's happened is the software has looked back through Microsoft's history, and it's looked at every single time the price crossed above the upper Bollinger Band. And you can see the number of occurrences here. There's 118 occurrences of that over that period of time. And then it's looked ahead from those all 118 events. And the very first column here, column C, is just looking ahead 2 days. And then it's saying in that period of time, what was the highest high value, what was the, or percentage, how high did it get from the close price when price crossed above the upper Bollinger Band, and how low did it get? And then it tries to figure out, or not, it doesn't try to figure out, it finds out and it puts into different buckets the percentage of occurrences. So let's take an example, and we'll go out a few more days. 2 days is obviously, it's a very and it's interesting to look at these columns column by column, because you'll find obviously it's going to be a much narrower range of movement over only 2 days, whereas if you go out to 21 days, you've got a much wider range of movement, as you would expect. So let's take a look at the 10-day column, for example. Okay, we can look down here. There's a green line in the middle, 100%. So this represents the actual close price of Microsoft on the day that you run this report. So the last close was 52.32, and it's put 52.32 at the 0% line here. And then if you're looking for, say, the 54 level, which is up here, 54.15 is about the closest we get. These are separated by 0.5% moves from current position, the closest we can get, and then Microsoft price is projected on that percentage. So that's just a calculation column which just says, you know, take the current price of 52.32, figure out how much 1% is, and add that to current price, and that turns out to be 52.84 for here. 2% is 53.37, and then you go to almost just over 54 at 3.5%. So then if you look at the 10 column over here, this column, and we're looking at the 54 level, which is the 3.5%, and the 10 column, we arrive at a value of 41%. So what that actually means is, out of the 100 and in this case, for this particular column, there are only 117 occurrences. We can talk about why that's different. It should actually be the same, obviously, for and if you run this for the reason is that the event actually just occurred just a couple of days ago, so obviously we don't have the right values for the very last occurrence, because you can't go out any more than 3 days from that occurrence, because it only happened 3 days ago. So that's why that's slightly different. The number of occurrences up here tells you the maximum number of occurrences, and that was 118. But anyway, this number here, 41%, is actually saying that out of the 117 times that were tested here, after or during the next 10 days after that event occurred, 41% of that 117 times, 41% of those times, price got to plus 3.5%. Okay, so if you wanted to know exactly how many of those, how many occurrences that was, then obviously it's just 41% of 117. So that's roughly, what would that be? About 47-ish. So 47 times out of 117, price got to the 3.5% level. And then if you go up through here, it got to plus 4%, 32% of the time. Got to plus 8%, 12% of the time. And then my color coding here is, I'll get to that question in a sec, John. The color coding here is orange if the percent of time is between 10 and 50%. It's red if it's less than 10%, and different shades of red. And then it's green if it's between 50% and 100%, and different shades of green. So the real bright green is your 100% level. So we are talking about trading days, not calendar days. That's trading days. Okay, so 10 trading days would be, obviously that's 2 weeks on a normal week. If there were no holidays, that would be 2 weeks. And normally the average is, I think, 21 days. average trading days in a month. That's kind of why the default is set up to be 21. But from here, it's revealing. If you like that particular event in terms of, if you think it's significant, the price crosses above the upper Bollinger Band, well, here you can really find out if it's significant, and you can find out what the bias is in terms of a move after that particular event. So let's take a look out at the 21 level. I think in my charts, we'll bring back this over here. I just want to see what the number was for. Yeah, we had 23 trading days, and it was a 42% chance move. That's what the option prices were predicting. So we want to get 23 days in here. So let's just run that again. It runs very quickly. I won't save that. But this time I'll make sure I have 23 days here. And I'll say just run that. This time we didn't have to download data. It was already downloaded. And now we get the report. Okay, so now let's look over at the 23-day column, and we'll look at the 54 level. Closest to 54 is about 54.15 up here, at plus 3.5%. And we're looking at a 53%. So in history, out of 117 occurrences, 53% of the time, price touched that level. Didn't necessarily close at that level, but it touched that at some point during those next 23 days. So the option prices right now, or as of that particular bar where price crossed over the upper Bollinger Band, were priced such that only 42% of the time it's expecting a move to that level. But historically, when price crosses above upper Bollinger Band, 53% of the time price gets to that level. So it's an interesting stat. How you would actually go about using this in your advantage, that's something that would be worth thinking about. But I'm sure there's an edge to be had in here somewhere. For instance, if price is really only reflecting a 42% in the options, means that the options may be underpriced. If you were to believe that Bollinger Bands and the cross above or below is significant, I wouldn't say all below, we're looking at the case crossing above. If you believe that that is significant, then maybe this number is more appropriate for the expectation. And therefore, the option itself, the June 17 option with 23 days left to expiration, is underpriced. So perhaps you don't want to be selling that option, because there may actually be a higher chance that price is going to touch that level. So it's kind of a play between what people currently think, what traders currently think, which is the actual options pot probability of touch, and historically what has happened under certain criteria. And I think that's information that you've not really been able to see before, and it becomes very interesting. I'll show you a little bit more about this template, because this report was produced by running lots of different simulations over that period of time for one stock. I'll come to that question in a minute. So I just want to show this first. And so all of the simulations that were run were actually run, and a trade list was produced. So I'm going to show you how you can get to the trade list for a particular column. So each column has its own trade list, essentially. So let's take a look at the 23-day column. If I selected something over there, now my Open Linked Document button is enabled. And if I open that up, I then arrive at the actual trade list of all of the trades that went into running this simulation. That in itself is very useful, because what you can do with that is bring up a chart, and if I turn on annotations and I run down through this list, you'll find as I go through here I'm now pointing at every single time that that event occurred. As you can see on the chart, as I go down to the next item in the trade list, I've got, you should find that it's across above the upper Bollinger Band. So that's quite handy. Also, if you want to sort of verify numbers in the report, it's the MFE% and MAE% columns that went into producing those numbers. So MFE stands for maximum favorable excursion, and MAE stands for maximum adverse excursion, meaning that this is a long side trade that was taken. So if there's a favorable excursion, maximum favorable excursion, it means that price got to that level. That was the highest level it got to after the entry, 10.27. The actual close, PL%, tells you where it closed at after those 23 days, and that was at 4%, but it actually got, in this case, to 10.27%. And the adverse excursion for that trade was 0%, never went against in any way. If we scroll forward the chart, we'll see the whole trade, I think, for this one. There we go. So there you can see why, you can see the price never actually went against the entry, and therefore this is 0% adverse excursion. So this one would have been something that would have been added into this, it would have actually made it into the plus 10% because the favorable excursion was plus 10 point something %. So this would have affected the number that's in here. It would have been one more stock that made it to the plus 10% if you get how that works. It also would have had a +1 effect in the box below the 9.5%, and all of the boxes down to 0. So it would have, but it wouldn't have been a number that would have affected the boxes higher than that because it never made it to any of these numbers up here. And if you take a look at the very top entry, that was a plus 24%, and there was only 0.85% of 117 stocks that made it that far. So what is, I imagine that's 1. Let's just see. Yeah, that is 1 stock made it to the 24% level. So if we go back to that list, we can probably find out what that stock was because we can sort by MFE%. And you can see right here, there was only 1 stock that made it to the 24% level. It actually got to 24.29%. Yeah, but that one would have had an effect for all of the numbers below 24% as well. And so you can kind of see how that goes into affecting the shape of this report. And you should always find the report looks something like this, with the red levels will always be getting wider. They should never get narrower. Just to, it's just not calculated that way. It's impossible for that to happen. But it's sort of how wide do they get, and then also looking at what the extensions are from 0, this level down here. Is there more of a range above, meaning that price was favorable, more favorable than below? And that sort of shape that you see leads you to a lot of information about that particular stock. Now, I only ran this for Microsoft. This hasn't gone through all stocks in that symbol list and figured out the averages. And you can do this on a per stock basis. I think that's quite revealing. You can try it on ETFs. Gives slightly different. I mean, all of the shapes are very similar to this, but slightly different in terms of if it gets wide early on or if it gets wider later on, and also if there's more of a bias to the upside. So it's actually a lot of things going on with this template, and it's running simulations without you having to go and change the simulation settings in the software. So it's very flexible and easy to run. And now, so one of the questions that came up was so weekly options. So if you were looking, the option price that I was looking at, bring that back over here, this was just a regular expiration. 17 June is your third Friday expiration in June. But if you look at any of the other chains up here, I don't have them expanded here, but I could probably do that. 1 second to bring in the app itself. Think or Swim. 1 sec. Uh-oh. Here it is. Okay, so it's this Think or Swim. It's the paper trading account, but it still has the probability of touching. So if you're looking at weekly options, 3 June, so that's 5 days to expiration. And if you look at the 54 level here, in the next 5 days there is an 11.1% chance of Microsoft touching that 54 level. Okay, so approximately 10 out of 100 times, or 1 out of 10 times, price is expected to touch that level. That's after 5 days, and this report here, you don't have to rerun it now for 5 days, because obviously we ran it for 23 days. We can just look at the 5-day column and see, look, our 54 level is plus 3.5%, and after 5 days we're expecting there's a, let's see where that is, 22% chance. Okay, 22% versus the option is priced at only a 10% chance of price touching that level. So it could be handy to know that. So that's the way it works. It's just based on the option's expiration and how many days are left to expiration. Now you probably kind of inferred by what I've done here and figured out this. But I've been running let's say a test that I've chosen. All right, I chose to run cross above upper Bollinger Band. So the software didn't say, oh, Microsoft is currently just crossed above the upper Bollinger Band. Now let's figure out probabilities based on that. I mean, there's probably lots of signals that happened that day, not just cross above the upper Bollinger Band. There were probably pocket pivots and moving average crosses and all kinds of other technical things probably fired. And each one of those things will have its own technical history as to what happens. But you are now fully able and free to go and check those things out with the software. One of the things that is actually quite nice now is, this has been in here for a long time, but now it becomes quite useful, is you can choose to, instead of looking at the system scans area, there's actually a whole list of candle pattern scans. Okay, and this comes from a third-party library. These are defined somewhere else, but these have always been in the system. So you could, look at hammer candles. So let's just take that as an example. Okay, now I'm looking for hammers in Microsoft between 2000 and 2016. How is that a significant candle? Let's run the test. Okay, pop that over. Oops, sorry. Pop that over there. And if you want to see what a hammer is, you can actually just open up the linked document as I did before, and then each one of these is now pointing at a hammer. Okay, so look for where the entry is. That is the thing we're picking up. So this is a hammer. This is a hammer. And those candle patterns. There's probably 50 different candle patterns in there, and I've no idea what some of them are. I know some of them because they're very commonly talked about. So, but it's always a good idea just to go and check to find out what they actually are. So everything that I'm clicking on now, this is what it thinks is a hammer. All right, so and I find that really interesting because whenever people talk about technical events, some people will say, oh, the hammer is a very significant event. So if you ever see one of these hammers, price, invariably goes up after that. And then you'll see a chart like this, and you'll say, oh, well, price definitely went up there, and you're led to believe that price always goes up after a hammer, or at least most of the time. This really will help you to detect that BS and find out really what happens in certain conditions. So the way that you could sort of detect that here is to take a look at this report, okay? And then just generally, I think what you can see from this report is, here's our zero line. What looks, to me, I didn't even try this before coming onto the webinar here, but I'm just looking at it right now with you guys. The number of values that are here, to me, looks a lot more than the number of values that are here. So it's wider and more of a bias to the downside. So to me, what that says is, I can guarantee what that says is that the last 16 years in Microsoft, whenever there was a hammer, after 9 days, I think that's the 9-day column, price was generally, on average, lower than it was higher. It had the ability to touch lower levels after a hammer than it had the ability to touch higher levels. And that's interesting, right? Because most people will say hammer, I wouldn't say most people, that is a generalization, but you hear people say all the time, hammer is a very bullish candle. So here's a way to really figure that out for yourself. And I think that's really important. You don't want to listen to people and just accept information without testing it for yourself. And let's take a little closer look at this. Okay, we'll go up to, we're at the 9-day column. I don't know why I chose that just randomly, but the 9-day column, you can see that the 7%, so plus 7% after a hammer happens 12.33% of the time. But minus 7%, which is here, just here, happens 20% of the time. And actually minus 10.5% happens 12.33% of the time. And we're talking about 73 occurrences here. Always a good idea to take a look at the number of occurrences, because obviously the more occurrences there are, the more significant the statistics are. But so that's an interesting. I think that's super interesting. What you can also do is, now we've got this candle up here, this candle output report for the hammer, is you can run other types of candles through here or any other technical criteria and compare those shapes of the report. So I think I closed that one down already, the other one. Let's open it back up. I believe it was, let's see, this one. This is the AUBB, yep, so that's the one cross above upper Bollinger Band. Let's pop that over here. Okay, and now we can kind of put them side by side and actually see the differences. All right, and I think you can see that that is a very different type of behavior to that. There are slightly more, there's 117 occurrences in cross above upper Bollinger Band here, and only 73 occurrences for the hammer, but you can definitely see a difference in the pattern. This is information you've not been able to see before. I don't know anywhere else that shows this information, so use this to your advantage, and I believe that you can definitely work on your own edge in trading with this. Even if you're not trading options or trying to sort of figure out whether an options price is something you want to pay up for or something you want to sell, even if you're not trading options, you can just use the template to figure out ways that a stock is likely to move after certain events. So I mean, I've covered most of what I wanted to talk about, kind of explained how the template came about and what it shows. I'll take questions. Okay. Yeah, I'll take questions, and if you think that you'll find this useful in your trading, type a Y in the box. Let me see. If you think you'll never use it, you can type an N. That's okay. Fred thinks it's good. Paul will use it. Good. Great. Ron, William, Robert. Definitely use it. Yeah. Yep. Good. So one thing I think, or where we can actually move forward as a group of people who use the software to try and kind of help each other, is what you'll probably find now is that you'll want to do your own scripts, because you'll probably have an idea about something and you want to put together a script for testing that idea. So let me introduce you to, if you're not a member of this forum already, but the EdgeRater forum will be a place where we can, okay, yeah, so let's go to edgerater.com. And let's go to if you go to support and click on Ask the Forum, you'll find the forum for EdgeRater. If you're not a member of the forum, you just have to do a register up here, and then I'll get some information about somebody wanting to register, and I'll have to enable you, but be patient a little bit. I will get around to doing that. In the forum, you can actually use this to create a new topic, and you could request for someone to help potentially with putting a script together. There's so Henry's been very active recently with putting a lot of scripts on this forum, and so let's, you could take a look at one of these scripts, and we'll give you an example. So what Henry's been doing is actually coding or cross-coding, or putting in formulas that he's aware of and putting them into the chart script format. And what you can do with this is you can actually just copy the text that's in here, copy that, and create yourself a script in EdgeRater and just copy that in there. And you will have essentially these this indicator. Something like this, you can see what it's trying to show you down here. It's over in the bottom area. So this particular one wouldn't be good for conditions and events, but it is an indicator. But I would recommend trying to use this to put together some events as well. Would be a good way that we could all learn a lot from each other. I think it would be good. Also, I'd recommend right now just playing around with what we currently have in the system. And you'll probably find that there's a lot in there already, so you may not even want to start coding your own, or not yet anyway, and play around with some of the things that are there. Let's take a look. So here's another trick. Once you're in this area, you can actually type a search string. So if you're looking for potentially, I can type cross and see what comes up here. So we've got quite a few scans here. We've got Bollinger Bands crossing, you've got Elder Impulse crossing, exponential moving average crossing down. Lots of different types of crosses are in here. So let's see if we can find here MAD. MAD, moving average cross down. Event is generated whenever the fast moving average crosses down through the slow moving average. Also MAU. So it would be kind of fun to see if MAD has a different sort of report to MAU. So what you could do is you select MAD and you say you want to look at, you can choose whatever parameters you want here, obviously, but it's set the default for 22 and 50. I'm going to leave it like that for now. You can choose your own adventure when you play around with this. Okay, MAD 2250. I'm still going to use Microsoft. Also, you can use any stock or ETF that you like. And I'm going to hit the run on here. All right, let's see what that looks like. Okay, and it's got a very different look to it than the other indicators we looked at. It looks very different to cross above upper Bollinger Band, right? You've definitely got a much lower area coming out over here. Number of occurrences, there's only 49 occurrences, so that didn't happen as frequently as cross above upper Bollinger Band. And remember, this was moving average crossing down, and 22 crossing down below the 50. That's how it looked. Led to lower prices on the whole than upper prices, higher prices up here. At least in terms of touching. Doesn't necessarily mean that after 22 days it ended up down here, but during that 22-day period it at least touched that level. Now let's take a look at MAU and compare those two. So I'm just going to choose MAU 22 and 50 and click on Run. Okay, it's got my little report I'll put over here and see how different that is. Okay, so oops. All right, so you get slightly different looking reports, but it's interesting because, to me anyway, this is interesting because, you know, I think a lot of people when you hear people talk about technical indicators, a lot of times people will say, well, when a moving average crosses, you know, you get a 22 crossing through a 50, that leads to higher prices. Well, yeah, some of the time it leads to higher prices, but you know, a lot of the time it leads to lower prices too. So it's really important to be aware of that when you're trading. There's a lot of randomness in price movement. Definitely a lot of randomness. But using this template, you can actually figure that out. And so in the MAU case here, moving average crossing up through the slower moving average, you still lead to lower prices, or at least touching the lower price levels quite frequently. Okay, and also touching the higher levels. Again, there's a spread, spread between the upper and the lower areas. It looks a little bit different to the spread on MAD, but that's very interesting. And I'm pretty sure that the option would not have been priced based on price crossing through that moving average. It's priced based on forward-looking estimates by the people who are trading those options. So another little tool you can put in your tool belts and try and get statistics on your side to be consistently profitable. If you trade a lot, you want to definitely have the statistics working for you. You want to kind of be the casino rather than the punter. And by using a tool like this, you can definitely see what those statistics are, and you are not flying blind as such, just listening to what people are saying and trying to either believe them or figure out whether it's true or not. Run the template and find out. And maybe next time we'll get into creating our own scripts. We can do a little session on how to create a script. I might take some ideas of things that you want to test, but also put some ideas in the forum. If there's a good idea in the forum, we'll take that and run with it for a future webinar. So 10 minutes left. I probably will end this early unless we have more questions. Okay, I guess to why the divergence in probabilities. I have no idea, John, really. Divergence in probabilities, yeah, I have no clue as to why the why the stats are the way they are. That's just the way they are. I mean, if you have ideas, let me know. I'd be interested in hearing your thoughts on that too. The recording will be out pretty soon, probably within 3 hours or so after the webinar is finished. Bradley? Yep. Can you run multiple symbols? Well, this template is a one symbol at a time template. So yeah, this particular template you run against one symbol only. It may think about putting a template together where you can run it against multiple symbols at once, where it will do, process multiples together. But for right now, this is just a one symbol template. We'll find out, what people think of it. If you like it, if you use it a lot, if you have other ideas, send them to me, or you can send me an email at chrisw@edrator.com, or put it on the forum. And feedback will go into improving the software and new templates for sure. The forum. I'll just show you how to get to the forum once more. Somebody asked that question. So just go to the Edrator website first and go to the support page. You'll find a link to the forum on the Edrator support page. In order to post something in the forum, you need to register for the forum. You're not automatically registered for the forum if you are if you have an Edrator login. You actually have to register for this separately. It's a separate web application. So register separately. After you've registered, you need to wait a couple of days just so that I can get to you and approve your registration for the forum. But after that, you should be able to post questions. Just click on the forum link and you'll find a whole bunch of questions or topics in there already, but just create a new topic. If you see any other questions in here that you can answer or add your own feedback to, go ahead and select them, and you can start having conversations with other traders and other users of the software. You can post a reply, you can ask questions. Henry seems quite helpful about putting together scripts. Any ideas on connecting to seasonality? That's an interesting question. At the end of the day, seasonality is just another form of technical analysis, right? It's just taking slices of time instead of continuous patterns. Yeah, so I'll have to think a little bit more about that question, and what we could possibly do about doing something with seasonality testing on this. Okay, Paul, if we copy a script from the forum, how do you place it in the program? Good question. Let's go through that. So we're on the forum here. You've got, let's take the first one, volume oscillator 5025. Maybe you like that one. Maybe you like the rainbow oscillator. Let's have a look at that. Okay, so rainbow oscillator. Here's the code. This is what it should end up looking like after you've put it in the system. So what we'll do first is you select the code right here, and then you would copy that with Control-C or right-click and say copy. And then you want to create your own script in Edrator for that. So come over to your chart designer. Okay. Come over to where it says chart scripts. and then say new script. And you'll find a little dialog box will appear, and you can paste that code in that we copied. And this particular script doesn't have any parameters associated with it. So everything is hard-coded in here. But sometimes a script will have parameters, in which case you'll have to come to the parameters tab and add those parameters in here. You know, for instance, if it was a moving average cross, you'd have the slow period and the fast period. You'd have to add those in as parameters here. But this particular script, you don't need it. And if it is required, normally the script in the form, there'll be a note which says add these parameters, so you'd have to do that. Anyway, once you've copied it in here, you just click Save As, and you could say, well, I think it was called Rainbow OSC, put that there, and then you close this down, and you should find then in your My Script area, you have a script called Rainbow Oscillator, and if you double click on that, it gets added to the lower part of the chart. Very nice. So yeah, lots of extra things to look at there. Now obviously this script would be no good for running a test because it's not giving you events, it is giving you indicators. So an event essentially is where it's like an indicator, but it's just giving you a 1 value when the event or occurrence happens, and a 0 value when it isn't happening. So for instance, cross above upper Bollinger Band, AUBB, I could actually put this on the chart by double clicking, and now you see I've got ones and zeros, okay, whenever the cross happens. That's really the main difference between an indicator type script and a scanning script, is just that it outputs ones and zeros. And so the way that the template works when you're running it against a script is it looks for values that are 1 or greater and uses that as an entry signal. If you try to use the rainbow oscillator as an input for that, you'll find that you'll get an entry every single day because the outputs are actually greater than 0 every single day. So just a little something of interest. Okay. Robert, are there any trend-following system topics in the forum? I am not sure 100%. You can definitely do a search in the forum to try and find, let's have a look. You can search within a topic, or you can, if we go up to the forum itself, you can search the forum, and you might type in trend as something. Let's see what we've got in here. So there's a couple of things talking about trends. Not all of these are going to be scripts, but anyway, you can definitely take a look at some of the topics that come up there. The recording for this webinar will be sent to you. You're obviously registered for this webinar with GoToMeeting, so that's where you'll get an email back from them about the recording. Eventually I'll probably put a link to it also on the website, but that may be a couple of weeks down the road. Okay. All right, I think we're pretty much done. We have taken an hour. Enjoy your Memorial Day weekend. No trading on Monday, and have a play around with the template. Hope you like it. Please send me feedback if you like it or not, or anything you would like to sort of see improved. Thanks, Jerry. Fedley. Thanks, John, and Robert. Good. Well, thanks everybody, and thanks for your questions. And we will see you all next time. Have a good one. Okay, bye.